This is On Tilt Trading. Let's review my trades from today. To put my charts into perspective, we have candlesticks up here. We have volume profile here. This is a slow stochastic indicator. This is MACD. These purple lines that you see here, these are Camarilla pivot points. This is R4. This is R3. This is the 15-minute chart. This is the daily. First of all, I usually check this blue line right here. This is also a blue line right here. This is the 200 EMA. Same thing right here. This is the 200 right here on the daily. So the daily I use to gauge whether or not I think a currency pair is strong or weak. So this is my deciding factor on that, and then I decide whether or not this helps me decide what direction I want to trade. So if a currency pair is trading above the 200 EMA, I only want to go long. If a currency pair is trading below the 200 EMA on the daily, I only want to go short. So this 200 on the daily gives me my bias on what direction I want to trade a particular currency pair in. As we can see, Ripple is trading above the 200 EMA, so I have a long bias. So I'm looking for a long. Also, we can see with this being R4 here, based on my trading system, which is based off the Camarilla pivot points, any price action on a currency pair that is above R4 is a long. We can see here, I believe this was yesterday, so that won't count. But today we have Ripple right here in this area. Price action going above R4. So this signals along for me. The other things that we're seeing, I'll walk you in, or I'll walk you through what we're seeing here on the entry and walk you through my entry process. So first we'll come in and once we have the price action in the target area to take a trade, next I want to set up the Fibonacci retracements in order to gain my entry. So what I'll do is I'll use my indicators right here to backtrack and determine where the beginning of the move starts. And then here we can see this is the end of the price action above the R4, and then we wait for pullback. So I want to enter on pullback. So I'm using the slow stochastic and the MACD to give me my range on my high and low for my Fibonacci retracement to get entries. So right here, once the price action gets above R4, I want to wait for pullback, and then I can set my Fibonacci levels. So this is going to be my high right here. I need to find my low. So I want to come over here, and I'm just going to I'm just going to scroll over, which will give me all the information that I need here on the slow stochastic and also here on the MACD. But I'll just put one circle on these so that you can see what I'm looking at as I scan across here. So now I'm backtracking here, and this is the area that I want to target right here, also this area. So I'm looking for a slow K crossover the MACD to give me where my level is. So just scanning here, scanning. Oh, this is a long, okay. So the MACD will cross over first here on this long here. So you see here with the MACD level, we're showing negative here, and now on this next candle here, we show positive. So here, I want to backtrack to the lowest level from this candle, and now I want to look at the lows of each candle, and the lows of each candle will be right in this area. This is the high, low, and close. So this is the low right here. I'll be watching the slow K right here. Be looking for it to cross above the slow D, and right here on the difference, I'm looking for it to turn green. Then I'm backtracking to the lowest point here. So we can see here, this is where we go from negative to positive on the difference on the MACD. So now I want to look at this low, which is 24077. I want to back up 24011, back up 23995. Okay, 24030. Okay, so this is my low here, and then I already know where my high is because we've got pullback here. So now I'm just going to pull up my Fibonacci retracement levels. I've got my low here, and I can come in. Actually, I need to move this. So I've got my low here. I've got my high, and now I can zoom in, and where I wanted to take my entry, where I did take my entry was right here at this 0.618 level at 2412. So my entry was here in this candle, but as we can watch the price action here, we can see that we failed this level here about a couple hours later, and now it's just been consolidating in this lower end of this range, sold off a little bit, and now it's back in this range and maybe selling off again. So this trade failed, but it happens. No trading strategy is 100% based on market conditions. It's a probability game. Next up, we have Near Protocol. So Near Protocol was trading this afternoon near R3. And you can see here on the daily, this being the 200 EMA, that Near Protocol is well below the 200 EMA. So my idea for this trade is a short. Based on the Camarilla pivot trading system, or any system based off of Camarilla pivots, R3 is an area to short, and it would be a traverse down to S3 down here. So this was the trade idea. We'll zoom in to take a closer look at my entry. So actually, we can see here in this area, this morning we have Near Protocol testing R3, and we can back it up a little more. The previous day, we can see that it's looks like it's trying to sell off, but we'll get a little closer to the open. So here, what is this, 7? So here, this is 7:30. So this is the open of or what would be the open of the U.S. market during the weekday. I try to keep the same hours daily as far as in when I look for trading opportunities. So opened up here, buyers bought the price above R3, held here, sold off. I was looking at XRP at the time, so I wasn't watching this because even though this on the daily we're below the 200 EMA, here on the 15 you can see that we are above, trading above the 200 EMA here. So when I see this, typically I would, or this gives me some need for caution. I like to see price action on the same side of the 200 EMA for any trade that I take, just like the Ripple example that I just showed first that failed. The first thing I'm going to do is try to trade anything that is on the same side of the 200 EMA on the 15 and on the daily. If I don't get that, then secondary trading opportunities, I'll look for these, as in a currency pair that is below the 200 EMA or above the 200 EMA on the daily, and then is the opposite on the 15, but the price action is very close to the 200 on the 15, and we can see the price action is pretty close here. And then we have the sell-off. We have some consolidation below R3. Price action, buyers drive the price up back again up through R3. This is when Ripple failed. Now I'm saying, okay, market conditions are not very strong. If a strong currency pair cannot break out above the 200 on both the 15 and the daily. So now I'm thinking weakness. So I'm looking at my secondary options for trades, and this is where I get near protocol and the remainder of the currency pairs that I traded today. So we can see here we're well above, or we're in this zone above R3 and R4. And for Camarilla trade, or for Camarilla pivot point based systems, anywhere in this general area, midway in this range between R3 and R4 is an ideal place on where you want to take a short for an R3 to R4. You can also take it here at R3. Some people will try to catch it up here from R4. Depending on the price action, may determine what entry you try to get, or where you actually find the currency pair when you're ready to trade it. Depending on where it's located, you may have to find your entry. And I'll go in, I'll zoom in a little closer, and I'll walk you through my entry on this near protocol. So seeing it up here, we sell off, get some consolidation, sell off again, and then I'm going to watch the again. I'll bring your attention to this area, the slow stochastic. We'll clean that up. The slow stochastic and the price levels here for the candlesticks. And then we'll come across here and we'll trace. So what we're looking for is crossovers on the MACD and the slow stochastic. For a long, the MACD will cross over from negative to positive first, then the slow K will catch up. On a sell, the slow K will cross over first, followed by the MACD. So right now we're just going to scan, and we can see in this area, same thing when it broke out here in the morning at the open, or what would be the open of the U.S. market. The slow K is above the overbought level. So here, as I'm scanning, we'll see where we get a crossover. Okay, we just got a crossover here where we can see the slow K is right now above the slow D, 73 and 67. Now we have a crossover where the slow K is now 60 and the slow D is a 69. So this is our first signal to go short. And now I just want to backtrack to get my level. I don't like these double top or these flat tops. I like to find a wick to place a stop, or to place my Fibonacci levels. So I'm going to place it up here, and I scan this. So this candle is the highest after this slow K crossover. So this is going to give me the top of my Fibonacci level, Fibonacci retracement level. Now to get confirmation, I want to see the difference on the MACD go negative. So we can see this happens at the same time. We get the slow K cross over the MACD, and then we also get the MACD going negative here. So this gives me my signal here for MACD to start tracing the MACD to a pullback level. Actually, hold on, yeah. To give me a pullback level. So I'm going to be looking for, this will be the level down here. This is pulling back right now. So when I actually took my entry here, this was based on this level here. So we had a breakdown, and then we had pullback. So here, I took this early here. When it sold off, pull back, just in case, or assuming this was the top, which was a risky entry. I took this on pullback and had to survive a lot of pullback here. This would actually be the legit entry somewhere up in here, but it's really close to pulling back. So this was not the best trade, not the best entry, because we get signals after I enter. If we follow this particular trade here, or if we follow this area, we can see we would have been stopped out here at the open here. So not textbook, but I saw an opportunity to get a really good risk to reward by putting my stop back here. It's also very risky because I hadn't got confirmation of the trade idea yet. And then stopped out here. Next we'll go up to Chainlink. Same basic idea here. I'll walk you through what I'm seeing. Still bring your attention over here to this area. We can see here on the daily, we're below the 200 EMA. We're above the 200 EMA here. So again, not the ideal setup, but the buyers don't seem to have the momentum to be able to drive prices higher today. So looking for short opportunities for, let's say, B-type setups. So I take an entry here, and we'll follow what's happening here. Again, I actually with this one, let's zoom in a little bit. This happens early here. This breakout here of R3, and this is R3 up here. This purple line is R3. And I'll trace you through here, and we can see at this level here, we get a breakout, we get a sell-off, and then if we watch these numbers here, we'll get levels. Let me get a crossover. So here we can see here in this candle, the slow K is above the slow D. So it's 90 and 82. We can see here we get the crossover at 74 and 84. So this is going to be the top of my Fibonacci level right here. And then we're going to keep going until we turn negative on the difference on the MACD. So you can see here there's the shift into negative. So now I'm going to be looking for my low. So we're coming in, and this would be my low here. So my Fibonacci high for this particular short trade idea would be here. Fibonacci low would be here. So we'll zoom out, and we'll find this would be my level right here, this 14034. That would be my ideal entry here. And we'll scroll across here. It's 14304. I was able to get that level or a little better on pullback, even though I didn't see this until later. Backtracking, able to get an entry here. Sold off a little bit, but then bought back up here, and buyers are retesting this R3 level. So this trade idea, again, a B setup, not working the best, or didn't work the best. Just a small win or a small loss. Never made it back to my stop loss. As you can see here, we're in the afternoon. So usually at the close, or what would be the close of the U.S. market, volume dries up, so I start setting protective orders, and this hit a protective order here. And we have Algorand. Okay, Algorand, same thing, another B setup on the daily, trading below the 200, on the 15-minute trading above the 200 EMA. What I'm seeing here, as you can see in this area, price action was bought up above, and this is R4, and this is R3. And price action was bought into this range, this mid-level here, in between R3 and R4. And we'll zoom in a bit here. And same thing with the entry here. Bring your attention to these areas here, so that we can get our numbers for Fibonacci, and then we can take entries based on these levels. So we can see this morning, Algorand price was bought up above this R3 level and then fails. So if we trace and we bring our attention to the slow stochastic there in the middle, we can see we're close to a crossover here with 74 and 73, and then we get the crossover here in this candle at 65 and 74. So if we backtrack here, this is the swing high that's behind the slow stochastic crossover. So this will be the top of our Fibonacci retracement level. Now we'll continue following price action until we get to negative here on the MACD. Okay, here we're negative on the MACD. Now we just want to follow price action to the next swing low, which is here. And now I want to set my Fibonacci levels here and here. And then my entry level, or desired entry level, is going to be right up in here, this 2014 level, somewhere in this area, or 2015. This is going to be my ideal entry here. So we'll zoom out and scroll over. And where I see this particular currency pair, I spot it here. So all this price action has gone through because I've been looking at XRP. So I take an entry here. We can see this comes back and just barely tests R3 and test the level of 2014 that I was looking at with the Fibonacci retracement for an entry. Take an entry here. We get a good sell-off. Sellers are in control here. We can see sellers have some momentum here. They're able to take the MACD, this green line below the average, fairly well to get some space. And we can see the slow K stochastic is in an oversold condition. So there's this is indication of strong selling pressure. And then we're able to sell below this 200 EMA. So we're showing some weakness in this area, but we're putting in an isolated pivot low here, and we're getting a MACD crossover. So this is going positive, and we've got a crossover on the slow K. So this has initiated a reversal, and then I stopped out here in this candle. But these are my trades for today. This is On Tilt Trading. We'll see you next time.